What's up guys, Raymond here with another financial statement analysis, and we're going to be doing our last, final, conclusive video of the German energy sector stocks, which I'm very happy about, simply because it means we can move on to our next group of stocks, that being, I should know this off by head, but let me just quickly check. So as you can see, this Voltabox, this is the stock we're going to be looking at in this video, is the last of the German energy stocks, and the next group of stocks we're going to be looking at is the materials sector. So there are a bunch of sectors we're going to look at in our series, all it being encompassed into the German sector, the German list of stocks, and then after the German stocks, we're going to be looking at the United Kingdom and progressively downwards throughout the countries. So without further ado, we're going to get into Voltabox. If you're new to my financial statement analysis videos, what we do is we analyze financial statements, as you can tell by the title, but specifically we look at the top 3 financial statements, those being the income statement, the balance sheet, and the statement of cash flows. If you're new to these terms, it might be a good idea to look at my previous videos where I outline what these statements are and why they're so important to a company and to investors, and how it helps investors to determine the financial strength and financial future of a company to a large degree. So without further ado, we're going to get into the video, and we're going to look at the starting point, which is the key ratios. The key ratios suggest that the company's market cap is incredibly small at 23.5 billion euros. That is probably the smallest market cap I've ever analyzed in my financial statement analysis videos. But anyway, the revenue figure shows that the company made a revenue of 3.49 million euros, which is quite good with regards to its market cap. We're going to look at earnings per share, which is negative. That means the company made a negative profit in the last financial year, and the P ratio doesn't show because I guess the volatility level is quite high, so it's hard for the company to adjust to the price to earnings ratio. So the dividend yield also doesn't show, probably because of high volatility, and the beta shows that the company's volatility level is at 1.01, which simply means that the company's the stock's price fluctuations are at 1% of the market average of 1. So we're going to get into the first statement, which is the income statement, which shows the overall profitability of the company in a specific financial period. And as you can see, it doesn't look very good, simply because if the dark blue bar is below the middle line, that shows that the company has made a negative profit, as we saw earlier in the key ratios. And as you can see, the company has managed to decrease both its revenue as well as its net loss, which is very good actually. But you have to look at proportionality instead of overall quantity of loss, and you can see the proportion is still there. I think it's actually increased. The net loss is actually probably increased, even though the overall revenue has decreased and the overall net profit loss has decreased. The net profit loss is actually multiple times the revenue figure, which means if we look at the income statement in more detail and we look at the numbers, we're going to probably be shocked. We're going to quickly look at that. So negative 439,000 in the 2021 financial year, negative 1.28 million, and negative 2.84 million, which is not staggering, but considering that the market cap is quite small, it isn't a good sign. So we're going to look at the balance sheet now. So the balance sheet shows that the company has also done the same thing with regard a similar thing to the overall revenue and profit. It's decreased its assets as well as its, I guess the company is probably liquidating, because to be able to minimize or reduce for a company to reduce its assets so fast within 3 financial years, it's close to zero. The company has to be in a liquidation process, so or some other similar process. So also the liabilities has decreased, so I'm guessing they liquidated their assets to be able to pay off their liabilities. But the company's assets and liabilities at the from the last financial statement shows that the assets are just above the liabilities. So the ratio is still the same. It's just that overall the company's assets and liabilities are just decreased massively over the past 3 financial years. So we're going to look at the last of the financial statements, which is the cash flow statement, and we're going to look into more detail at the 3 parts of the cash flow statement, that those being the cash flow from operating activities, the cash from investing activities, and the cash from financing activities. Also concluding with the net change in cash, as you can see here, which is already negative 23.2 million, and the starting line being the net income, which is from the income statement, which shows the profitability of the company, how much profit the company made in the last financial year, as well as the prior to. So we're going to go straight to the 2021 financial year, and you can see the company's starting line / net income is negative 10.01 million euros, which means it made a net loss of 10.1 million euros. And the company also lost money from operating activities of 8.22 million euros. It gained 9.88 million euros from investing activities, so 9.88 million euros was invested into the company. And financing activities, it lost 3.59 million euros in financing activities. So that's probably, as you can see, divided up into financing cash flow items. And the issuance of debt, retirement of debt, that means getting rid of debt. So they paid off 1.37 million euros worth of debt. And the net change in cash shows that the company overall made a cash loss of 1.393 million euros, which, if you think about it, is actually pretty good to end the year with, simply because they have managed to lose 10.01 million euros in profit, and to end up with a lower figure of negative 1.93 million euros shows that they probably allocated their cash very well. That doesn't necessarily reflect on the company as a good structured company, but it's just a positive indicator there. But that is pretty much it. Those are the financial statements, the income statement, the balance sheet, and the cash flow statement, and provided for you, showing that this company, Voltabox, is probably not something you would want to invest in. I'm not too sure why they haven't actually made any indications that they're going to be delisting the stock or something of the sort, but they're probably allowing the company to go through the liquidation process. But without further ado, I will see you guys in the next video. Thank you guys for watching.